All right. Doc here from North America. Good morning, good afternoon, and good evening. What do we have going on this morning? Well, let's see. What is news? Not much news out there. the the same story again. Are they going to cut, 6, 7 times? Well, that seems to have drifted. The stock markets showed great strength yesterday. And let's show you that. There's the dollar index right there. We show you the strength there. That's moved up because we kept on interpreting the action as there aren't going to be 6 cuts. And sure enough, there weren't 6 cuts going to be happening as far as we can tell. And we'll sit there and watch. But if we get a cut in May or June, that will be about as best as I can imagine. I don't see why they need a cut since, Mr. Biden keeps on telling us how great the economy is. So why do you need a cut? That would only generate inflation. And that seems to be the rationale at the moment is they don't want inflation. Hey, Robin. As we take a sip of our coffee here. And so we go from discussing Mr. Biden's, I guess you could say his misinterpretation of economics in general. And we know that they just can't basically let me just double check my voice to make sure I'm hearing me. No, something's wrong there, I think. Oh, yeah, okay, there it is. There you go. Interesting, I had to push the button on it today. Never had that before. All right, so the answer to the whole question really comes down to is, I guess, earnings, really that's what the mother's milk is to the stock market, and they keep on seeing there's no other place to go. And when I say that there's no other place to go, the problem is that if you look at the Russell 2000, about anywhere from 40 to 50%. I understand that at this point, 35-40% of the Russell 2000, the companies have not made money in over 5 years. I keep on telling you, 60% of the companies are not making money this year, but over the last 5 years, they just don't even earning anything. And so then you go and look at the Wilshire 5000. There's only 3,800 or 3,300, some odd number, but it's not even 4,000 stocks in it anymore. And so that's why I say there's nowhere to go, because there's been so many mergers and companies. Basically, mergers have shrunk the equity markets down across the world. And so there's just less and less places to invest. In other words, choices. And of course, there's different pharmaceuticals and different oil companies and so forth and so on. But they just keep on reducing the quantity overall. Now, when we go and look at the, in this case here, what do we got up on the screen here? We got there's the dollar index, and then there's both dollar indexes, the J4X one right there, and the one on our beta. You see it's flirting around, trying to bounce back and forth a little bit there. It's throwing a red dot in there, but overall, it's still moving in that direction. It's still in that weekly, heading up. So the overall trend on a daily and weekly basis is up. Okay, and then I guess we could even try to put it. It's not that active a product, but what we can do is we can go and show you. We created a Duke. Where's it at? Right there. And there is the, we were talking about in the beginning of the week wanting more action. A lot of people want to, see or be told, or let's say suggested, more action. So here we are. We have 2 intradays there. One is the S&P 500 intraday right here, which went into the buy right there. And you can see it just bounced around. It's still in the buy. Then it just went into the sell right there. So obviously it went up in value more than it went down when we went into a daily buy. Just as when it went into the daily sell, intraday sell right there. And finally went into the intraday buy right there. Now we have it closing in the intraday sell right there. And you can see the weakness that we have there. And then we throw the number, how do I describe this best? The second largest economy in the world, the European Union, and the second most active currency in the world, the euro. Here it is right there. It went into, and let's widen that out so you can see it just as well, like so. And we'll just make it the whole screen right here, because Janos was saying they're looking for more action, more new ways to invest and so forth. So you can see here it went into the sell. I'll show you the last 3 cells. I guess it was right here. Went into intraday sell. Went into the intraday buy right there. Went up. Went into the intraday sell right there. Went down. Went into the intraday buy right there. Went up. And then it went into the sell right there. And I guess it's still in that cell right now. That's what it is. It's still in that cell. And what happens is that both the blue, maybe we should make the blue like a line or something like that. You know, it could be interesting. And that's an interesting idea. Let's do this. Let's see if we can do this. And make it a line style. And instead of a histogram, make it a line like that. There we go, and close. And there, in this case here, it went into the buy right. I think it was right here. And stayed in the buy until it broke down where both are below. And it's in a sell since this was not able to get across. You can see it's minus there now, minus now. And so it's in a sell since right there. Right there, it's in a sell. And so for those that want to trade intraday, want more action, they only have $200 or $300 in their account. Well, this is the way to do it, intraday trading. And for this hour every day, we'll have it on here. We have a second. Oh, let's make this like this, and let's show you what we're talking about here. Now we go like this. Let's see, shrink it back down again. And then we go right here, and you can set your intradays to this. Now, over here, we're using a 96 tick right there for the euro, and we're using a 960. Is it 936 for the S&P 500 because it moves that fast. And you can go over here. And you can change these settings. You can do the tick settings. What's that? Alt Control. Alt Control. And we can change that setting to must be a way of changing that setting. And put what's that? There's oop. Nope, I'm going to go back. Let's see, ticks. I guess there's a way of doing that. You can get that tick thing going. And we'll figure a way of getting back to there. And you could put the same ticks into this and use these 3 indicators that we've developed for everybody. Let's see, how do we do this? Let's go like that. Go like the 3 tick. There we are. And there's an intraday 3 tick. Let's make it bigger. And you can see where it goes into the sell right there and goes down. And you see it goes into the buy right there. And now it's trying to go up. Let's see what we got over on ours. At the same time, it's trying to do the same exact thing. Right there. See that? Right. Let's move that over a little bit so you can see the 2 together. We can even go like this, make it even biggerish. And see, it's trying to turn up at the same time. And we just need our math to turn there, in this case here. Where is it at? Right there. So the slow is, what is that? That's at 18. No, that's at 19. And the fast is at 17 or 18, so it's still in a sell there. Now there, the fast is trading at, so we can figure out what the fast is. You can adjust these things on your chart and make it so that you can see what they are. And then, you know, go from there and basically, let's see if we can make this bigger, like so. There we are. And you can see this seems to be moving up, so this is back jumping into the buy. We're waiting for ours to jump into the buy. And you can trade that intraday market, you know, because we were told that basically people want to do both. Want to do intraday, want to do daily, you want to do weekly, you possibly want to do monthly. You know, I guess it all comes down to the individual, because we have no idea, you know, how much money you have in your account, what type of experience you have. So it's very hard for us to say this is the way. You know, like in the Mandarin in Star Wars. You know, this is the way. In other words, there's many ways of trading, many different directions you can take, and only if you would only ask, I can give you a general idea of any specific way. But if you don't ask, then I can't tell, because I don't know if you have $200 in your account, or $2,000 in your account, or $200,000 in your account, or $2 million in your account. I don't know if you've been trading for 2 days, 2 weeks, 2 months, 2 years, 2 decades. You know, I have no idea. So I have to give a general point of view to everybody. That's the whole idea. And if you ask, then I can describe. And if you don't ask, then I can't, you know, specifically say this is the way. And the Mandarin way. Did you know that I sit here with a mask on? Yes, I've got a metal mask. This is the way. All right, let's have another sip of the coffee, since I've basically laid out the attack. That was good coffee. All right, now let's go over to the daily again. There it is right there. And as you can see there, dollar index looking very firm. Very firm. Over here, let's throw it up on the, where is it at? Right there, the beta. You know, you can see it's trying to do a little dip here or there. Nothing major. Let's make it larger. But, oh no, look at it. It's still climbing up also. But I guess I had knocked it down and now it's perked back up again. Let's go over to the actual dollar index on our existing platform. Right there. There you can see there's platinum at the same time. And there it is. There's the dollar index showing that strength. We have a red dot and a green dot. That's why our beta is showing you the red at the moment with it lifting up. But you can see here the line is trying to, in this case here, you can see the line is trying to challenge the zero line as we speak right there. Let's just make that larger so you can see it. There's the zero line right there. And then when we go back to the beta, our test project here, which we've always said anybody out there would be interested in using it for a little while, just give us, you know, just let us know, because you know, Robin will gladly turn it on for you. You just go right to here. We'll show you where you have to go. No, not there. Nope, right there. Let's go right here. And we'll show you where you can go to find out about it for free. We'll use it for a couple weeks, 3 or 4 weeks for free. If we can figure out where it is at the moment. Bonds, Quant Technologies, that's the one we use now. And why am I not seeing our own platform? Let's go find it. It'll jump up here quick, I'm sure of that. Chicago. Quant Technologies right there. And there it is. And let's do this too. Let's do this. Let's save that so I can go to it next time. I probably have it in charting. Let's put it in trading. Right there. And then we go down to trading and pull it all the way up. So next time I'm like, oh, I can leave it down at the bottom. That's just as good. We rarely go to it. And so you're welcome to go there, and you can get our free platform. Or our platform for free, which for about 3 or 4 weeks or whatever. Talk to Robin. He'll help you with it. Let's put it that way. Okay? All right, now we'll go back to the technical side and get rid of that cheap advertisement right there. And so there's the dollar index, and like I said, you can see the weekly. It's pressing up. And what else can we say about any of these? I guess you could say, in the sense of that dollar situation, everybody's starting to calm down a little bit about the 7 cuts, 6 cuts, 5 cuts, 4 cuts, and 3 cuts. All right, now let's go over to the second largest economy in the world. That is the European Union. Let's see, right there. Let's get that euro up on there. Right there. You can see it has that downwardly pressure that's been going on it for a while. I wonder if we can get rid of that. I'm not even sure what that's all about. But and at the same time, right there, and see, you can see the indicators right there. The fastest at 21. The slow's at 16, and it's trying to turn up a little bit. Let's put it up on here, and we'll go like this, and we'll go like that. No, like that. I think that's what it is. There it is. You can see it's trying to turn up over here too at the same time. Both of them are trying to turn up. Trying to get through the zero line right there. You see it's at plus 0.000065. So it's trying to lift. We got some lifting going on, but when it comes to the actual price, no. They're knocking it down again. So I guess that's like another reminder, that the interest rates are going to stay, where they are, up in here. They're not cutting them. And so when you're investing in different currency pairs, you usually try to buy the currency of higher interest. So you can put that money into a bank account there and collect higher interest than the interest you receive in your home currency. Back to the coffee. Let's have another sip of coffee. There we are. And that's what pairs trades do. All right. Or that's one of the fundamentals that make pair trades happen. Let's put it that way. If you're not buying something from that country, then you're obviously trying to invest in its higher interest rate return. Something old-fashioned, really. Up until 2008 or 9, for thousands of years, people would pay interest to borrow your money. So if they borrowed money from you, they would give you interest. And then going into 2009 under Mr. Obama, that turned into the opposite. If you borrow money from somebody, you may, in this case here, they may pay you interest. So they borrow money from you, right? And you pay them interest so that they will borrow the money from you. That's definitely unique in its own right. But that has been since basically the election of Mr. Obama. That started right around the election of Mr. Obama and has been going on, within weeks of that. And since then, it's been part of the financial universe. I think there are some minus rates still in Japan, and I think there might be a couple other places. It's hard to say. They might be just at 0 or a tenth of a percentage point, things like that. Nothing meaningful. But that is now, things have definitely changed because of the inflation. The inflation basically shook that that concept up, thinking, oh my goodness, not only am I losing money because the inflation rate is rising, but I got to pay people to take money from me. Yeah, I'll say that again. I've got to pay other people money to borrow money from me. Yeah. Wow, huh? Talk about a wow. That's a wow. All right. Now, let's go like that. Putting my tea on the tea holder now because the coffee is coming towards its end. All right. I have a hard time taking that whole thing serious when I say it to you, say it out loud. All right. So there's the euro. It's stumbling along. We were in a sell from there. It was down, jumped into a daily buy there, fell right back down. Might even made all the money back. First of all, you wouldn't be long to begin with. And traders, why wouldn't you be long? Well, let's make that very clear why you wouldn't be long. Because we're in a weekly sell since up in here. See that line right there? Weekly sell. See that's breaking through the zero line? Since it's breaking through the zero line, any buys are not done. So you don't buy there. You only take the short. So you'd sell it short here and watch it go down. And then when it goes into a buy, you don't get long. Again, there's another short right there. So there's 2 wins in 4 weeks, and there's only 2 trades in 4 weeks. See, there's another thing. When people say they want to trade more, or they want to be more dynamic, or they want to learn more, there's an example right there. There's only 2 trades in 4 weeks in the euro. So that could be longer term trading, couldn't it? But then there seems to be some that want to trade, they only have like $200 or $300, and they want to trade intraday. Or they have to go use binaries. Now, with $200 or $300, you'd use the options market, and use the binary calls and puts, or outright calls and puts, and then what your limited risk is, and you buy it for like $50, and you're only risking, say, 25% of your money. And again, that's why we say you have to tell us what you're interested in doing, because I can't give you the advice, because I don't know if you have 200, 2,000, 200,000, or 2 million. Ta-da! Now let's go look at the intraday market again, since that seems to be an attempt here. You can see that we went into the buy there. This is the euro. No, I'm sorry. This is the S&P. Went into the buy there. Went into the sell right there for that and that bar. Still in the sell from that bar. And now we're back into the buy for that bar, and it's losing. Okay? But it's still in the buy. So, again, if you're trading intraday, you have a couple different concepts on how to trade intraday, be it a quick stop, limiting the amount of punishment you take, or you might have deep pockets. I know I haven't used that concept in a long while. Deep pockets, and so you can afford to hold on until it goes into a daily sell. Deep pockets. That's what we used to call it on the trading floors. They had deep pockets. In other words, they had a lot of money, so they could hold on and take the loss, and then go and take the next trade and play the percentage. In other words, if a system is 85% of the time right and 15% of the time wrong, you're going to win a lot more than lose, especially if you have your stops correct, or you have enough capital to put up with the pain. That's what we refer to it as, the pain. So in this case here, let's see what happened there. Did it close in a sell right there? It says, see that? It says 0, 0, zeros. The white is zeros, the green are zeros, and the blue is 0. So not yet. You're still in the buy. Now, this has to close like this. It has to close with this being a minus 10 or something like that, or it has to be a minus. And you're long from right there. Where's that? From 0875, and you're down 2.25 points. So that's okay. Looks like now we're getting closer of closing in a sell. We'll see. And if you have a stop on, maybe you take, if you're only willing to take one handle stop or two handle stop, or maybe you just do the percentages. It all comes down to the individual and their abilities, be it the financial abilities, be it the trading abilities. What else is there? I guess, and the trading tools themselves. But we're really close to getting into a sell, so we'll see how that plays out. And all you're doing now, if you've been following that mathematical concept, you're well ahead, and it's not that painful. And we'll see here, we got 426 ticks, as you can see right there. There's 409, 395. This is a 936 tick we're using. 347, and we'll see if this goes into a sell, and then see if you can make the two handles back. Usually it works that way. And we'll sit here and watch it for a while. And, slowly until someone says, oh, I want to trade intraday, or I want to trade daily, or I want to trade weekly, or, I want to trade binaries, or I want to trade options. I want to trade just the underlying product. Can't give you real advice correctly if I don't know what you have the capacity to do. So here we are. You have myself and Robin. Robin's monitoring this all and types in on the chat line. And we have over 100 years of experience between the two of us. So we can generally tell you if we can't find the answer, if we don't know the answer, we can usually find the answer. That's what it comes down to. All right. So from there, oh, okay, there it goes. It went into the sell. So there, 575 from 825. So it has 2.5 handle loss, and now it's in a sell, and you're short at 575. All right, we'll shrink that down, and we'll go to the cable. See what the cable's doing. So let's see, we're going to bounce back and forth to intraday and daily and weekly, and we're going to do it all. And if you're interested in stocks, or if you're interested in commodities, you just tell us. We'll get there if you don't ask. But if you're hungry to know now, we will. We will. This is the way. That's right. This is the way. All right, now there's the cable right there, dollar cable. It's around here somewhere. Where'd it go? Dollar cable. Oh, no, it's cable dollar. That's what it is right there. You can see for a couple of days now it's been trying to bottom out over here. We have that. There it is right there. It's tried to lift up. I believe it closed in a daily sell. Let's make it bigger. Did it close in a daily buy yesterday? No, because we were green and red. We followed the green and red dots, or the hinkies, on daily and weekly basis. We don't follow them on an intraday basis. That's why when you go back over to, where's Mr. Mouse? When we go back to this, you notice there's no dots on here. And we're upside down on this still. There's a second bad trade developing at the moment. We'll see. We shall see as it plays itself out. So there's the cable. Today the cable, with it being down, is trying to go into a buy. Now, traders, why can't we take that buy if it closes in a buy? Because we're in a weekly sell. See? Right here. So the longer term trend week over week is telling us that it's weaker, not stronger. If Giannis is around, how's this going, Giannis? Does this make more sense to do the webinar like this? Let's take a sip of the tea while I'm waiting for Giannis. No, if Giannis is in, I guess we'll see. Let me just check the chat line for Giannis. Nothing there. How about there? No, nothing there either. Okay. All right. So. There we go. There's the cable. And cable's trapped in that same consolidation on a day-to-day basis. That big box we have up there on the top. You can see it's there. It's just been consolidating up and down, up and down. No real clear direction. Wasn't a weekly buy for a long while. Months back in November. Went into the weekly buy down in the 121 area. Climbed its way up to the 128 area. Interesting. Again, that's why we say, you have to tell us what you're interested in doing because, I show dailies and weeklies, but, we're not sure that everybody wants dailies and weeklies. They may not have the capital to trade dailies and weeklies. They may not have the education to trade a daily or a weekly. They may not have the tools to their access to trade the dailies and weeklies. All right. So from there, and as you can see here, let me just show you J4X too. Same situation, long, steady, sideways consolidation. In some ways, it almost has that head and shoulders look, but I just don't see that weakness because I think that currencies know that there will be interest rate cuts down the road, or Mr. Trump will become president and the economy will do so well. Interest rates were so low under Mr. Trump. And inflation was almost at zero. It was at 1.4 and 1.1 and bounced all over the place around there. And it was very low. And so it was a growing economy. We had Chinese-style GDPs with Mr. Trump. We had the biggest gain in the stock market in history under Mr. Trump. The stock market itself tripled in price. And at the same time, at one point, it did we had one year where it went from it had a 77% gain. A 77% gain. Under Mr. Reagan, which was the second largest gain in history, had a 63% gain. And I think that's kind of interesting in its own right. I was looking at those stats a couple days ago. I just thought I'd mention it. So you want to try to, you may have a query in your heads about why is the market acting so strong when things are just okay, And what did he say Tuesday? Okay. Basically, that's one of the most powerful things of all is that the markets are, even a George Soros chief investment officer, totally opposite sides of the political spectrum. They basically have. He came out and said the markets are recognizing the fact that Mr. Trump is percentage-wise so far ahead of Mr. Biden that the markets are starting to anticipate his election, his re-election, I guess you could call it, and at the same time, anticipating a healthy stock market. Okay. Just took another sip of my tea. Excuse me. Let's go to the cable. I'm sorry, not cable. Yeah, we'll go to the cable on J4X, and let's put the Swiss up there. Now, Swiss keeps on lifting. They're fighting the inflation, but it's not, it's not like, trying to take out this major top there. And that's not even a major top because we saw this product climb up to the 102 area. Was it the 102 area? Like that. Yeah, 102 area right there. So we're just seeing a little dead cat bounce to fight inflation, now doing what they can. And there it is right there. You can see we're at the top end of the range at the moment. And then from here, there's the Swiss. Same thing. We went into the weekly buy back in here. I think the fast, let's make that bigger. Fast gave us a warning here to be, that the pressure was on the upside. And we went into a daily buy there on a daily basis. Stayed in that buy all the way up to there. and then was in the sell all the way down into here, and now they're back into the buy again. And you can see it's lifting that way, and the slow weekly algorithm has been in the buy now for a good solid 3 weeks, and the fast has been in there about, was that 1, 2, 3, 4, going into a 5th week. You know, you can see that pressure on it. And again, that's why we remind everybody that you know, if you ask questions, it's a lot easier to be able to give you great advice, some of the best advice in the world. And if you don't ask questions, then I just go through my natural rhythm of how the markets work and what it's doing, and you know, doing what we're doing right now, which is fine with me. I just want to see what we can do to give other people in the webinars opportunity to grow. And I'm going to have another sip of my tea since no one's asking me any questions. I get bored when people don't ask me questions, so I just go through my rhythm. I sip my tea because it's 8:07 a.m. here in the States. All right. On to the next product. And that is the yen right there. You see, ooh, look at that spike. They went into the sell yesterday, and now they're back in the spike. Let's grab one of these reds. So it went into the sell right there. And right now it's trying to climb back into the buy. Right there. As you can see, it's the fast algorithm right there has been in the weekly buy almost all year long. You see the slow joined in the middle of January. It really hasn't gone too far. Matter of fact, as much as it's gone up, it's almost gone down. Now we're back into a daily buy again right there. Popped up. And then they pushed it into the sell yesterday. You can see that. Oh, that T goes down nice. And you can see right there, now it's trying to go up again. Now, I didn't see, what's been driving this currency to a great extent. It seems to be the LDP situation in Japan. So, I didn't see anything particular from it. There wasn't any news or anything like that. There wasn't any real frustration. But, oh, there you go, George. There's a name from the past. How you doing? Morning, Doc. Robin. Oil is up this morning, and can we see it on your charts? Since you're asking, I'm always asking. Indeed, it's like 3 days in there, I think, at this point. Let's check out the oil market right there. Go to Robin 1. That's the page, and there it is right there. Yep, you can see that it's climbing up. We've got the weekly. Well, you know what? Look at that. We got to get that box in there. We got the weekly trying to get back into the buy right there. So there's the strength coming in there. This was interesting as we were going into the sell. We don't have a which one is this? How come we don't have a fast weekly algorithm? Let's just double check this. I'm curious about that. Oh, it's a gas 3. It moves so fast. This thing has a high beta. So I don't run that. And I've been thinking about trying to do a 1-3 or a 2-3, something like a 2-3 instead of a 3-5 for a fast algorithm. But I've never gotten around to that. I'll have to work on that. But as you can see here, that strength is there. And you can see it's trying to do it there. And then we shrink it down to, hey, you know what? We can do this too. I'm glad you asked. George, why don't we do this? There's the Swiss. Let's go over to the crude oil there on the J4X. And I've got a good idea. Let's go to the intraday too. This way I'm hitting all the buttons for the small traders, the big traders, everything. And let's go over to, so there's crude on our work. Now, let's take a look at it on the beta, and I'll get the other one set up. Right there. And there's the beta. There's the beta right there. You can see it's trying to climb up into the weekly there too at the same time, and it's showing the daily. I think the daily is it doesn't update correctly until the end of the day on the beta. We're working on that code. Yes, that's yesterday. So it went into the buy yesterday on the beta also, and it's not reflecting what's going on today except for price. We're reflecting price, but we're not reflecting the algorithm because that's yesterday. See it right there? That's the 7th. And so now let's do this at the same time. Let's give you an intraday view of it too, just showing you. Remember, we have a philosophy around here for decades, and that is if it doesn't work on a daily and weekly basis, then it's not working on an intraday basis and vice versa. If you're using the same mathematics or the same, let's put it this way, the same algorithms on a intraday basis, it should work on the other way around. So let's do this. We're going to copy this. Remember, it's got a high beta. So we're going to paste this. And then you can watch it. Okay, you can watch us do it. Let's put crude oil in there. Right there. Go right click. Put crude oil in there. And you're going to see it on an intraday basis too. Is that right? Yeah, that's it. And let's just put change products. And that's Charlie Lowry futures. Right there. And let's see how that goes. There we go. Let's just double check how far back are we going. Are we going back 1 day or 2 days, or what are we doing here? That's what happens when we go 1 day. Oh, there it is. Okay. Nope, no problem. There it is. So we went into the buy right here at the, what is that? We went into the buy at 73.77. And now we are a dollar. Okay, it went into the sell right here at 74.57. Okay. So you almost made $1. You made 75 cents on that one trade. And then it went right back into the buy again at, let's use a little line here to see if we can help you to see it even better. Then we went right back into the buy right there. I guess that's it right there. Let's make it the whole line. Go like this. Make it white and make it extended. There we go. So then you went into the buy here at 74.57. 74.50? No, 74.70. 74.70, and it is traded as high as 74.96. So that's a 26-cent gain, and it actually went into the sell off of that one too. So we can move this over like that. There it is. It went into that sell right there, and that's still in the sell. Still in the sell from the what area is that? 74.84. Now again, we don't know how deep anybody's pockets are, what their trading experience is, any of that. We have no idea. So we can't give you exact advice because I can give you half a dozen probably concepts depending on your situation. So right there, it's in the short at 74. Where's it at again? It's in the short for 74.84. 74.84? Yeah, 74.84. No, 74.80. 74.80 it went into the sell, and now it's trading at 87, so you're losing 7 ticks. And I think at the original, imagine if you're a good trader and you go in to sell at 80 and the low is 73, you could have taken 7 ticks out of it, or 5 ticks out of it, or 4 ticks out of it. You could have had a stop. You could have had a reversal. You could do all kinds of different technical analysis type things. But I can't give you that advice because I don't know if you would understand what I'm saying. And if you would like to understand what I'm saying, just ask me and I will explain it to you, or Robin will explain it to you, and so forth. So, and it's still in a sell. It's still in that sell. You can see it right there. It's still in the sell, and it's 8 cents in the wrong direction now. And it went 7 cents in the right direction. Now it's in 8 cents in the wrong direction. We don't know if you're in it or out of it at this point. We have no idea. It all comes down to how deep your pockets are, how much your experience is. Now it's at 91. Now it's 9. Now it's 11 cents in the wrong direction. So it went 7 cents in the right direction, then it went 11 cents in the wrong direction. We'll keep an eye on that for a little bit longer, since this is us trying to make this webinar congenial and usable for everybody. The small, the medium, the large, the experienced, no experience, half experience. We're trying to open the doorway for everybody. How do you like that, George? You think that's pretty cool that we're making that suggestion? Now, for the deep-pocketed trader who plays the percentage points of a good system, you're only 9 cents down now. Or you may have even made 6 cents or 5 cents or 7 cents, or I don't know. It's so hard to say. Now you're 8 cents down, but we're still in the short. And so we're just kind of, just marching along, trying to give you the best information and the best understanding of how to trade. And that should be the title here today. There we're 5 cents down, 6 cents down. And that should be like the title today too. Basically, there's 4 cents down, 5 cents down. And we're still in that sell where that white line is. Now we're almost breaking even. We were just 1 cent down. Yeah, I find this much more interesting myself. And we're 2 cents down. And let's see if we get a break, and it goes down and challenges that 73 mark again. And some traders will have like a 74 bid, that type of thing, if they're still short and they didn't cover. And and then if it breaks that low, that's fine. Maybe they have 5 contracts on. They would cover 3 of them at 74, and then set a bid below that. That's one way of doing intraday trading, depending on, again, your resources, your experience, so forth and so on. Yeah. Got the title now. I love this. And what's the low now? Is it 80? Did it get there? I think it got to 80. So it made it down. Now, some traders will actually, because it went the wrong way, they may just have like a 79 bid or an 80 bid. They might just want to get out and wait for the next trade because they've been tested already, and it wasn't that good of instant gratification. And so they do things like that, like just cover and take a loss and wait for the next opportunity. But again, that is basically, we're going to call today's webinar Trading When to or Not. And that's a good way of doing that. And here you go. George says, no deep pockets here. I hear you. I guess it comes down to, it's not as much as how much money you have. It all comes down to how much experience you have. And then that's pretty much the answer to it all. And basically, there you go. We're back at 81 again. Some traders would be bidding 80. If 79 trades, more than likely they covered. Maybe they were lucky to get a fill on 80. And they wait for the next opportunity. If they have a 5 or 10 lot or whatever, depends on the individual. If they're trading a 1 lot, if they're trading a 2 lot, 3 lot, whatever. And the end result is that they may have bids underneath now, since it's been dragging along. Remember, there's an old expression there. There you go. 79s have traded. There's an old expression: never short a dull market. And so here you are short. It's gone 5. It made its money. It made a 5-tick win. It made a 6-tick win. It made a 7-tick win. It made a 3-tick win. So, it now has gone the reverse direction and had a 11-tick loss on paper. Now we're sitting on the sell number. We're pushing harder still. It looks like we're reiterating the intraday sell. See that now? We're below. It's trading at 78. They may have covered some of their product at 79 and 78. They may be saying, okay, I'm short 20 more, or I'm short 50, or I'm short 1. That's it. We just don't know. But now we're starting to break down again. And so, there's 77's trade. Remember, we got 73 there's the 76's trade. We have the 70, there's 75's trade, there's 74's trade. Remember, I said some will actually set a 74 bid and clean it all up, and then maybe leave one. It depends on the size, if they traded 5 or 10 or whatever. And then they will set like a 70 bid underneath it. And then at the same time, they'll have like a 78 bid for some to cover, so that they at least make some money. So this is why it's we have to address this whole conversation this way. Got to make a call? All right. Talk to you later. Oh, here we go. George says silver and metals. Thanks. Sure. Let's go check out silver and metals. And so there's just an educated way of trading intraday with a good mathematical program. And we've set one up on J4X for you right there. Or you have ours right here. And let's go over to the metals complex. Silverado. Let's see, right there. And there is the silver contract. Let's put it in. There's silver. It was flirting with a daily buy there this morning when we sent the charts out. Now you can see it's pressing back down again. It's been in a daily sell since right here for the last 3, 4, 5, 6, going on a 7th day. We've been in a weekly sell since the 23.5 area, or 2340, something like 38 area. And it's been in a weekly sell now for, 2, 3, 4 weeks. So the pressure on the daily basis, the weekly basis, all showing on that situation there. Let's go over to the gold. And we can do this too. We can go over there and put in a intraday gold chart too. Or an intraday silver chart. Do we have enough time? I think we might. Let's double check. So there is the gold. You can see gold has been in the daily sell since right here. Let's see, what's up with all that? Something looks a little crazy there. Looks like those things are reversed or something like that. I guess what it is that should be moved over to there. That's right there. And that should be moved over to there too. So you can see here, it went into the buy here. Now it's in the sell. It's going towards more of the lows of the day. We've been in a weekly sell since the $2,060 area. And we've gone down to $220. So that's $40 gain in one direction. And it went up to $280 and change. What was that, 83? So we went $17 up, went almost $40 down, gave you some instant gratification because we were in a daily sell from the almost the $2,100 area right there. And let's see what else we got going on there. Let's do this now. Let's go have some fun. Before we close out the day, let's have some fun. Let's go and take a look at gold. Oh, and let's see what the low now is with the oil. 71. There you go. So still winner, chicken dinner. Just depends on your abilities and the amount of dollars or equity you have and so forth and so on. Now let's try gold. Let's see what gold looks like. Let's see. Let's see. Gold is a lower beta. So let's put that in there. So let's go like this. We're going to go with a 93, like so. And then let's put the instrument in there like so. And that would be GC, like so. And let's see how that plays. I'm sipping a tea right now. I'm just waiting for them. There you go. So now it went into the buy right there. Went into the sell right there. Went into the buy right there. Winner, chicken dinners. There's a, let's see if we can show you it all. Where's the buy? There's a buy right there. That was a winner, chicken dinner. That is a sell. It was a winner, chicken dinner. got down to there, just made some dollars. The next buy was right there. It was a winner chicken dinner. Depends on your skill set. There's a sell. It was a winner chicken dinner. There's a buy. It was a winner chicken dinner. Same thing there. Same thing there. Went into the sell there and lost. Okay, after about 8 or 9 wins, it lost. Fits our math. Then jumps into the buy and makes money up to there. And then goes into a sell. Another loss. I think. Maybe not, because it actually got underneath where it went into the sell. If you're a skilled trader, you adjust for that. Then you go into your buy right there again. Another win there. Goes into the sell right there. Let's move that over. Another win there. Because you're going into the sell at, see, where are you going into the sell? You go into the sell at $2,040.70, and it goes down to $2,039.80. It's a winner. And then it stays in there. Now it comes again about your ability. It's still in the sell. Then it goes into the buy right there on the, what's that, $2,039.50. Remember, we got short in the $40 and $70. $40.70. And so then it goes into a, where's the buy at? Right, actually, let's see, the next buy was right there, and it failed, so you gave back some of that money you've been making, and it's still in the sell, and it makes the money right there. I guess it is right down in there. Does it make it, or does it not? Let's see. If it goes into the sell, was it there it goes into the sell? Let's double check that. We'll tell you in a second. Oh, okay. Let's move that over. It's in the sell from there. What is that? Is that a buy or a sell? Come on. Come up. There we are. 20 and 10. Nope. Still in the sell. Then there it goes into the buy. So let's move that line over to there. And it goes into the buy at $40.20 and trades as high as $40.40. If you're got it, depending on how you trade, it could have been a break even. It could have been a little win. If you're trading for 2 ticks, 10 ticks, 20 ticks, whatever. We don't know. And then it goes into the sell here, right there, and stays in that sell to there. Yeah. And so pretty much that could be a loss, because I don't think it breaks any lower. So got to have a loss here somewhere 15% of the time. But you've made so much money in all these other trades. And then there's a buy there, and it goes into a sell, whips you around, definitely loses something there. You lose like 50 cents. Then that one, same thing. Oh no, it's one back right there. So it puts you in the buy at $41.10, and it trades at, where does it trade to? It trades to 40. That doesn't make sense. What was that? Yeah, it puts you in the buy at puts you in the buy at $39 and $39.09, and it trades to $41.20. And then there's your next sell right there. Nope, it's a let's see, where's the goes into the buy right there. So you lose about 30 cents there. And it's still in the buy as we speak. And it went into the buy at $40.30. We'll see how that goes. Oh, it's into the sell. Now you've taken a hit of about 50 cents. And if you, depending on the speed, if you're doing robo trading, it fell into that sell. It probably needs to be extended more. Let's give it a little bit more. It's a little too, I think we need to definitely do this. Let's give it, change the setting, and we'll find, let's see what a 936 looks like. There you go, that's much better. Look how smooth that is. Goes into the buy here. Again, comes down to how much capital you have. Goes into the buy here at $45 and trades all the way up to, what is that? $52. That's a $7 win. Then it goes into a sell right here at $49, and was in the sell all the way to this point right here, which is, what did I say? This is a $49 short, and it trades all the way down to $38.50. A win. Okay. And then it's in a buy there, and it goes into 39, was that 39.80, and trades as far as 41.20. So you could figure a way of getting some capital out of that. Now we're in the sell. We're in the sell at 38.30, and we've traded as low as 37.30. So there's $1. All right. That is it, traders. This is Doc trying to give everybody a general good idea about intraday trading with just $200 or intraday trading with $200,000. Either way. Or daily trading or weekly trading. So today's title is, where is it at? I wrote it already and I like it. Me likey it. And the title today is Trading When to or Not. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Have a safe and smart day.